Man, what a week. There's a lot that happened, so let's get straight to it. Basically, the US government opened up on Wednesday, and then we did nothing but sell off since then. So last week I was talking about a potential buy the rumor, sell the news. That scenario did end up happening. However, there are a few notes to take into consideration moving into next week. The biggest thing that the shutdown took effect on, economic wise, and especially stock market and trading wise, is it halted a lot of data collection. So this is kind of creating an overall uncertainty and like an economic fog. So they've been trying to rely on private indicators, and that's kind of showing softening jobs and elevated inflation. So BLS jobs report that was anticipated in September is actually now anticipated in the middle of next week, anticipating on November 20th. The PPI, September PPI, is also expected this week, this upcoming week. September retail sales is likely to be delayed a little bit longer. Initially, the White House said the October jobs report and the CPI inflation data, quote, may never be released, quote, end quote. However, some updates indicate maybe partial October job releases may be coming. So stay tuned on that with whatever economic news you listen to. Otherwise, October job reports, they're possibly combining those with November and will be reported in December, right? And then October CPI is possibly not coming out at all. And that would be the first time, literally ever, that that has happened. Also, on top of that, the Feds, they're not speaking as confidently about rate cuts. So now the markets are actually pricing in a sub 50% chance of a rate cut in December's FOMC meeting. So we have a lot of data that is missing. And so it's causing uncertainty in the market. And then, especially when you hit tech, tech is volatile in itself. And then we have worries about AI valuations, which basically puts a little extra weight onto tech. However, as we go through this, you'll note some things. I still think this is a rotational market because some of the sectors, they're staying strong while other sectors are weakening or getting sold. So it just shows that money is coming from some sectors and moving into others. So let's get right to it, into the cash index of the SPY S&P 500. So last week's low right here, I marked it out, was 66.31, spot 44. We were not able to break this low. So we are technically dealing with a higher low at this point in time versus last Friday's low. I also created a trend line for you trend line followers. Interesting. So we held all here and we undercut it last Friday. We also undercut it and closed above last Friday and this Friday. We also tagged the rising 50 EMA too, right? We are also dealing with another lower high. So we could wedge into here and see whatever way this wants to break. Although, people are saying the stock market is crashing. The stock market is not crashing. We're 2.69% away from all-time highs. Now, could the stock market technically crash? Sure, it can crash at any point in time. This is not a stock market crash, okay? Also, we closed up 0.08% relative to last Friday's close, and relative to this week's open, somewhere around here, to this week's close, we closed down 0.7%. So really, after today's pretty wild move, we didn't really do much. We lost a little bit on the week, but overall, grand scheme of things, we didn't really do much. So just take a deep breather. RSP, equally weighted S&P 500, ranging, not doing anything, right? So we need to keep an eye on this 185 level, and then all-time high is 192 and some change. Let's go cash index, NASDAQ 100. We can see we had a little breakout. It failed. This low here was last Friday's low at 24,603.78. We did technically undercut that and make a new low today. However, we undercut and rallied. It's a similar aspect to undercutting and rallying above the 50. And also we did that today, just like last Friday, underneath the 50 and closed above. We are 4.48% away from all-time highs. We pulled back about 6% or so from all-time highs. So it was a nice little pullback. Yeah, 6.2, 6 point and a quarter. Nice little pullback from all-time highs. It seems like, especially after today's move, the dip buying is still kind of the name of the game and still the mentality of this market. I'm going to treat it that way personally. Until things change. However, things have the potential to change, especially if you're looking at these 8 and 21 EMAs. We are getting across here. So if you pay attention to that, that's typically one of the first signs of markets potentially changing direction. However, just because you follow some moving averages on a chart doesn't really actually mean too much. They could easily be negated. So don't put too much weight into it. Just use it as a caution. Equally weighted NASDAQ. I drew a little head and shoulders here. I'm not calling anything. It's a potential. This is the neckline. If it breaks it, maybe we start tagging the 200 EMA. That would be around this support level of 133 to 135. Not sure if that happens, but either way, equally weighted, not doing anything, and also putting in a reverse or putting in a head and shoulders. Dow, it continues to be in an uptrend, closed below the 21, hasn't touched the 50 EMA since October. I'll skip the Russell there. Well, actually, you know what? Russell, you see that starting to round, right? It's spent a couple of days closed, 2 days and consecutively underneath the 50 EMA. So I would pay attention here, especially if you trade small caps. However, this is kind of a rounding top. We do have an inclining 200 EMA that is. So maybe we get a 10% pullback off of all-time highs. We got another 4% to go to get around the 200. So I would pay attention to there as a point of interest. XLB not doing much. XLC, Netflix is continuing to drag this down. Meta is continuing to drag this down. And Google is also being dragged down by the general market, or at least it looks like it's starting to. So you can see I created a little downtrend line here. We're going to wait until that breaks, basically. We could get a little wedge forming. However, it did close below these lows here. So I am in wait and see mode for communications. I did think this was interesting last week, potential bear trap and a pop back in. However, it's right back to where it was. Energy looking interesting. So this is what I'm talking about, rotation, right? While the rest of the general market was weak over the past 4 days, this bull flag to the short-term MA and then popped, right? So we have some strength in energy. Financials, downtrend line broken, created a higher high. Now we're dealing with a potential higher low versus this Monday, November 3rd low. So financials could start getting strong here. We'll see. XLI not doing anything. XLK, you need to be watching XLK because it makes up a huge percentage of the SPY and the NASDAQ. As of right now, it did undercut this Friday. However, it undercut and rallied. It also undercut and rallied the 50 EMA last Friday and this Friday. We are getting a little 8 and 21. The 8 EMA is starting to cross the 21 EMA. So again, just caution and maybe start to get a little bit more defensive if you have not already. But as of right now, there's nothing significant to really scream and shout about. Let's move on to XLP. As I said a couple weeks ago, we are hitting potential supply here for this new range. We hit it, found supply, created a new low, and now we are looking to see if this prior support is now going to become this resistance. We do have Walmart. I think it's on Thursday. Has earnings. Real estate not doing anything. XLU kind of flagging here to the 50 EMA or downtrend line right in the channel. We'll see what actually happens. This could be a potential higher low versus last Friday. We shall see. XLV, here we go. Super strong. Last week I was saying this was getting tight, kind of an ascending triangle look, looking for the breakout. When we got that breakout on Monday, and it did nothing but follow through on Tuesday and Wednesday, and we're getting some rest on Thursday and Friday. We're only just above 5% away from all-time highs, It broke this prior level of resistance. Now we can probably, oh, look at that. It hit that 155 also. We can probably look at 157 and then all-time highs. So XLV, these names, Eli Lilly, Johnson & Johnson, and AbbVie continue to be strong, or at least that sector. XLY, Tesla got hit this week. Amazon is getting hit this week. I don't know about Home Depot. Haven't looked at it. But overall, look, it's just in a range. Nothing to worry about just yet. Could be a potential dip buy or a support play. I don't do that technically. Now, Bitcoin. Bitcoin is a different story. Here is the ETF for Bitcoin. Does that look good to you? To me, it does not. It broke this range, found support here, now broke that support, and next level of support I have marked out here is about 27% off of all-time highs, so 27.5 or so, so another 2% down. So we're basically there. Treat it as a range. This could just chop sideways and break even lower. Let's look at actual Bitcoin. Big range, right? Came down, broke it, created a lower high versus here, found supply, broke that, chopped around the $100,000 level, tried to bounce and failed, and created a new lower low. So we are indeed in a definition of a downtrend, which, let me remind you, is lower highs and lower lows. We are in a downtrend. We are underneath the long-term 200 EMA, midterm 50 EMA, and certainly the short-term 8 and 21s. So I would not catch a falling knife on this. Now, again, traders, long traders specifically, I can't short this stuff. So if you can short this, this could be potentially a good short on a bounce. Long-term holders, it's a different story. You know, a lot of you are excited about this for long-term to buy more Bitcoin at a cheaper price. It's a nice sale, 24% off of all-time highs. Sure, I'm talking specifically traders here. Next level is, I would say, is this 93, let's just call it $90,000 level. If that falls, we're probably looking at 85 and then even potentially 75. So Bitcoin, honestly, it doesn't look great, especially for short-term long plays. I will not be touching it myself. Let's go to heavyweights. Microsoft, this is just ranging, right? We got earnings, sold off, tagged prior highs, and did nothing but sell off. Found support here. We'll see if it actually holds. The 200 EMA is about 14% off of all-time highs. It's just below here, so maybe it starts to tag that. However, if it breaks this 490 level and stays below, we have all this potential supply above. So that could start a downtrend, and that would certainly weigh on the indices, the S&P 500 and the NASDAQ. NVIDIA, it's still holding the breakout level, was not able to close or even undercut last Friday's low. So we get a nice little push off today. We'll see. It's still in a short-term downtrend, right? We do have earnings this week, Wednesday PM, after market close for NVIDIA. Basically, the entire world is going to be watching. So we have volatility coming in this week, especially with all of the data that I talked about in the beginning of the episode. Apple, I just read a headline that Tim Cook could be potentially stepping down as CEO as early as next year. So I am very curious on how that will affect price action here. I did say yesterday that it could be a good short against this high if the market wanted to roll over. I mean, it didn't really do much. And I also don't short above these MAs. But, you know, an intraday short, nice tight risk could have been beneficial. But overall, it looks strong. It's one of the stronger relative names of this market right now. Amazon, just kind of trying to fill in that earnings gap up, which will be completed at 228.44. So nothing too crazy there. AVGO, again, at prior support area. You'll see a lot of these names are just ranging. Now, they have potential to roll over. Meta has gotten hit. This, I think, can continue to go lower. However, I do think there's going to be a long-term buying potential here. Eventually, here's the gap. The next gap that could be potentially filled at 570.50 to 549.10. Basically, what I think is going on here is that they are spending a ton on AI infrastructure and the future. So the free cash flow is basically decreasing, and overall market just doesn't like that. But Amazon did this in the past when they were spending a lot of money on building warehouses and for shipping and packaging and things like that. And then eventually, we just went over it. It made a turnaround. So that's probably happening with Meta as well. Just where it ends, I don't know. But I would, keeping some cash on the sidelines for Meta might not be a bad idea. Netflix finding supply here, close at the lows of the days. It's at 200, the 200 EMA. Again, it chopped around. If it breaks these lows, I don't know how low it can go. Maybe it goes to $1,000. That would be basically around this prior high. It's holding this prior high so far, hasn't really touched it, but either way, it doesn't look the strongest. Tesla, that's not a good look. I was looking for the breakout this week. We obviously did, or yeah, correct. This week we obviously did not get it. We actually closed below this range. This has potential to be a bear trap. Imagine all the people that are shorting this look, right? If we get back above this level, they're all going to be underwater that took the short down here. So now smart shorts, first covering shorts, will push this price up, which is probably what happened a part of today. But how far it will actually go, I don't know. It's spending time, a couple of days underneath the 50 EMA. We do have a 8 and 21 cross if you care about that. So I would be cautious. The 200 EMA is about 27.5%. So that's another 10% lower. However, if you're an investor, long-term Tesla, I wouldn't worry about it. Again, this is trading. Google, again, like I was saying, is starting to get hit this week. However, it's still undercut and reclaimed the 21. So it's one of the stronger names along with Apple of this market. CrowdStrike is also one of the stronger names. So these three, I was saying, was also the stronger names of last week. That has not changed that much. And so you can see that CrowdStrike, again, retesting this area, 10% off of all-time highs, and gets bought up. So CrowdStrike looks pretty decent. Now does not look decent. Broke this range, found support here. We have a nice topping tail at the 8 EMA. Things are starting to downtrend. It didn't fill this gap just yet, but once it fills 833.96, I think we're going to at least tag 807 and maybe even go for this gap fill to 776.63. Now with market weakness is a short. Palantir, I took a long this morning. I forget my order, to be honest with you, but I'm up a couple of percentage up points on it already. Basically, I was kind of trading it. I was actually looking for the gap down this morning to buy for a long because of how oversold we were on Wednesday and Thursday. And then coming into a gap down, I was just I've seen it a lot. So I took the chance on it and just managed my risk at the low of the day. But we undercut and then closed back in. So this has a potential to be a bear trap. However, at the same time, we have the potential to sell off and maybe tag the 200 EMA. That would probably be 32.5% off of all-time highs. That's another 15% down. So, if you're willing to risk that, it could be a potential short. I'm holding it. I held my long through the weekend for a potential gap up on Monday. I might regret it. We shall see. But I managed my risk either way. Hood, you can see, not really doing much. Still downtrending, finding support here. Down 16.5% on the monthly. It really has done nothing but get sold since earnings. It's still a strong name. It's a growing name. It's just getting a little rest right here. Per usual, every single name has potential to break down and go down or sideways, take its time. A lot of these names are just basing and chopping and going sideways. They have the potential to roll over. These have the potential to be distribution signs. However, at the same time, they have the potential to also be a base for a next leg up. It just matters about how on top of your toes you are, whether you do your homework or not, and whether you manage your risk. Specifically trading wise, investment wise, that's not what I'm talking about. So hopefully these videos are beneficial for you. Like, share, subscribe, comment below if you have any suggestions for me. If you want me to, share any other thoughts or ideas on anything else that I cover in these videos or something completely different. Otherwise, do your homework, prepare, Thank you for your time. Trade well next week. Later.